And just like that, we're back. Welcome to the channel. My name is Nick, and today we are going to be jumping down into the world of Bitcoin, taking a look at the most recent movements in price and what I would expect to happen next. As I get into today's video, if you find it useful and informative, smash that like button. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Link is in the description down below. Let's jump right down into today's video. We'll keep this one nice and brief, but I think I'll share all of the things I think are really important about Bitcoin right now. So let's start things off with that 1 hour time frame. So here we have Bitcoin paired up with USDT. We're using the BitGet spot exchange on the 1 hour time frame. Now, we had this great move up, and obviously I think a lot of people were probably getting a tad too carried away with this one. We were talking about bear market rallies in the month of October. That's exactly what we're seeing. We're yet to break out of the Elliott wave theory impulsive structured move to the downside. We haven't broken out of that yet. It's possible that we can, of course, we aren't there yet, essentially, right? So we don't want to get too carried away until we do have confirmation of decent structured moves out. Now, obviously the moves, if I zoom out of this, you can see, why we shouldn't really get terribly too excited. It was a small move to the upside here on Bitcoin. Altcoins obviously have rallied as expected as well. Nothing terribly too unusual about it. So what we see here, about a 9.88%. It's not too bad. I still expect a bit more though. I don't think we are done. I mean, we moved up to kind of the expected ranges at around $28,500. This is a gain from videos that we'll do talking about just at the end of September. Talking about how we were expecting a move and about a bit of a rally to the upside, and we still could technically push up towards those 30s, right? It's always a possibility, but I don't think we're necessarily done just yet. Okay, so let's jump into these structures, right? So smart money concepts. It's basically telling us that we are in a bullish structure on this 1 hour time frame. Okay, we have got confirmation of this, so you can see this change of character right here. Okay, we've got a break of structure up here. This basically confirms that we are in fact still in that bullish structure. Okay, now this BOS break of structure is actually more of a CTS, which is a continuation of trend, that kind of thing, but for the most part that's exactly kind of what's going on there. Okay, that's a breakout from the bearish structure that we were finding ourselves in to this move to the downside over here. Now with this move to the upside, it is corrective, it is not impulsive. What I mean by this is it's not a trend to the upside. Okay, from an Elliott wave theory point of view, smart money concept says that we are in a structured move to the upside. That's great. It's bullish for now. However, we obviously have seen this move back down quite aggressively. There are some smaller impulsive movements internally, but on a bigger, grander scale, it is corrective. And when I say it's corrective, it's a short-term move to the upside as we were expecting, which was a bear market rally. So let's go ahead and take our measurements on this, right? So if we take the low to this peak here, which is a three-wave move in itself. So I'll show you the three-wave structure. It's a three-wave structure here. Okay, it's a three-wave structure internally here on the A, and it's actually a pretty sharp drop to the downside there on the B wave. Okay, now the C wave obviously is quite impulsive, but it is basically still corrective. We then, of course, have the correction to the downside. Again, nothing unusual, 3 waves, and then we have a 5-wave move to the upside here, and it looks like it is like this. Okay, very corrective at the end with diagonal, but for the most part, the entire structure, without trying to overcomplicate it, and I'll keep it nice and simple, is 3 waves, and it looks like it is here, here, and here. And what I'm going to do is I'm going to take our measurements and I'm going to move that fib, and I'm going to move it to the swing low on the B wave, and we're just going to make sure I get this exactly on the nose. Right here, this wick low is 26,687. Okay, and if I then take a look at where we peaked right up here on the 1.382, just above it. Okay, that puts us in a WXYXZ positioning. So it's, although 3 waves to the upside here, because we've peaked above the 1.382, we are going to potentially run the risk of a W, X, Y, X, and Z, meaning we haven't yet necessarily finished with that move to the upside. That Z wave pattern would have the ability, let's go ahead and check it. The Z wave could go to get my yellow box here. Anywhere between the 618 and the 1.236 right here. Okay, cool. So that basically, if I get rid of the fibs, we don't need that. So basically, we still have a potential rally upwards, and this rally would basically be between $28,011 and $28,870. Okay, there's a white dashed line through the middle here of this yellow box. This comes in at $28,588, which, if I bring up our daily time frame, is our invalidation point for our 5-wave structured move to the downside from an Elliott wave theory point of view. 28,588 would break that structured move to the downside. Okay, so without breaking above that, so as in we haven't yet done this, so we need to break above 28,588 if we want to break out of this bearish trend pattern to the downside on the daily time frame. Okay, at the moment we haven't done that, but from our hourly chart here, you can see that it does run that possibility of doing so, right? We're looking for this Z wave structured move upwards. Now, what's going to potentially break out of that structure for the Z wave here? What would prevent it? Well, I think if we were to come down lower than our X wave, that's going to essentially mean that we are likely to be done here. So we're talking about 26,690 approximately. Let me see if I can find the exact number. 26,687. Okay, so if we're coming down lower than there, then we break out of that structure. That's not happening. It's just WXY upwards, and there's no Z wave, right? And so if that is the case, then that's going to basically confirm that our daily structure is still in play. Okay, because it means that we're kind of running out of momentum to the upside. I think, though, however, considering we're still in October and we're still expecting bear market rallies, that we do have the ability here to break out of this structure. We're still very corrective in everything that is going on here, and it is actually pretty much aligned to kind of being right where you would expect it to be from that kind of standpoint. Let me go ahead and show you what I mean. If I run a 3-wave correction here, you can see it's already come up to the 1-to-1 on that wave 4. So, for example, here, we were hoping that that was going to be the peak of the rejection of that 50 EMA. It wasn't, but that's what we were hoping. And we can now see that we've come and done a 1-to-1 ratio on a 3-wave correction to the upside, just short of the 28,588. That essentially means that our 5th wave target is still valid, 22,477 to 23,787. The only way to prevent that is to break above 28,588. So whether you're bullish or whether you're bearish, you know what you need to do, right? The bears are going to be looking to take this down to 22,000 to 23,000, and the bulls are going to be looking to break that structure by taking the price higher than 28,588. Personally, I think that we have the ability to break out of this bearish structure on the daily time frame, but it still will be a short-term thing. It's not going to be a long-term thing, and then we'll correct back down, and we'll see what structures appear after that. My opinion is that we'll probably continue bear market rallies in October, as we do see momentum shifting quite nicely to the upside. The big fear here is that we correct many of the momentum indicators this month. That puts us back into a bearish state of play for November, December. So just keep that in mind, because this is not an indication of real big bullish times. Nothing major here has happened on a BTC perspective. Take this up to a weekly, and you can see what I mean, right? We can see that the bulls finally been able to get that weekly close above the 50 EMA at $26,872. They finally got that close above there, so that's good. But we obviously did tap back up into that that supply range, right? That area of resistance at 28,600 to 32,289. So again, not looking strong there. But again, we do see here that the 50 EMA is above the 200 weekly EMA, and we are now above those. So it does look bullish, right? We have got momentum to support a further move to the upside on the weekly time frame here. So basically, we could see further moves upwards for a little bit longer. But essentially, my expectations are that this is just a bear market rally. And it'll be interesting to see whether or not we can get any closed positions inside the main area here at the 28 28,600 to 32,289, and because this is the area of supply. So is this going to continue to remain a supply, or are we going to chew through those sell orders and actually try to work our way above it? We'll be looking for closed positions above 32,289 to really get bullish on the market here for BTC. A little bit higher than that, 34,000 to 37,000 is also going to be a major resistance for Bitcoin as well, should we manage to break out of the initial supply boxes. Ultimately, if we actually zoom out here for a little bit, you can still see that this isn't anything major considering where we are in the bear market, and just brings my fears of a three-wave corrective pattern to the downside, more into kind of fruition here a little bit, because if we were to see this, we are talking about breaking into new bear market low points. We don't want to see that. We want to find good support. $20,000 Bitcoin, we have to visit this, in my opinion, at some point, and we have to find out how price is going to react there. So whatever that catalyst is going to be, I think we are just waiting to kind of see how that plays out. It's a very boring market for Bitcoin at the moment, but ultimately, I'm hopeful that 20k Bitcoin will hold, and we can continue from there to the upside. Failure to hold $20,000 Bitcoin, which I think is something that will happen in the next few months. A test of $20,000 Bitcoin will happen in the next few months. If we fail to hold that, then I think the new bear market lows are the thing that we're going to be looking for here. Overall, so we'll keep a close eye on it, but I think that's everything for now. I'm still very jet lagged, so I'm going to kind of wrap this video up right there. I think if you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.